Hey, welcome back to another edition of Forex Tech Magazine. It is your host, Lewis, and today is March the 8th, 2019. Hopefully, you've made some money so far this year, but if you have not, sit tight and join us. Hopefully, we can share with you some tips and tidbits that may be able to help turn that around for you and make you profitable. If you have been making money so far this year, congratulations. Excuse me. Sorry, guys. Um, But before we get into the tips and tidbits, let's get into the disclaimer. Disclaimer goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for entertainment and educational purposes only. Nothing that's shared with you by Forex Tech Magazine should be considered to be investment advice. If you are in need of investment advice, then our suggestion to you would be to seek out the assistance of a licensed, competent advisor. Now that we got that out of the way, let's go ahead and get into what you came here for, and that is to look at some trades. First one up on the board, we're looking at the U.S. Canadian dollar. Now, fortunately, yesterday I was not able to participate with you guys. I was just too freaking tired. I had too much stuff going on yesterday, so fortunately I wasn't able to do the stream. I do apologize. Normally I do the stream. I think it's probably like the second time since I started the stream that I did not participate in it, so I do apologize. But just want to let you guys know where we're at and what happened. So in this particular pair, we were, if you look right here, back on the 5th, we had took out a position in the Great Britain Pound Canadian dollar. That position did not work out. We wound up hitting our stop loss on that one, and we lost $4,533. Boo, I know, right? But the position that we had in the the U.S. Canadian dollar, that one did hit, and we told you that it would. That one we actually gained $5,162, so it gave us a wash of about $629.32. So a profit, $629.32. So even when I lost money, I was able to make money, just based off of the whole principle of locking in my gains. Now, this one right here would have been a win had I locked in the gains on this one right here, but I did not do it early on, and that's my fault. And I went up to think about maybe $1,000 or $2,000 on this one, and I just didn't lock it in, and that's just me being stupid. I just wanted to kind of see how it played out, and I saw how it played out with a loss. So remember, locking your gains, don't do that. Don't do what I just did. And this one right here, I did go ahead and lock in the gains early, and I think I think it was only up by like $500 or $600. Locked it in, and then it played out. It actually wound up being a home run for us, and we got the 5,000 out for that one. So that's good to know. That's good to see. All right, just want to share that with you real quick. Now that we share that with you, let's get into our looking at some of these trades. See if any of these setups make sense going into today to trade, or should we be sitting on the sidelines and kind of just waiting it out? So what I'm doing right here is just looking at our downward trend lines. I'm kind of just getting a feel of seeing where we're at in the market. I usually like try to come off of a high or the high, the swing high, and then base it off of that. And just kind of looking at that swing high. And this is the actual swing high out here. Yeah, it looks like a hold and wait for the moment. Yeah, and this right here looks like a hold and wait for the moment as well. And there was a buying opportunity back over this way. You can see what price actually show you here. So the buying opportunity here was when price crossed over this downward trend line, right? Could have played with tight stop loss, brought it up to here, and you've been good for the moment. And then of course bring your stop loss up to a risk-free trade after you turn profitable. But as you can see, price pulled back down, consolidated, now it's kind of drifting out to the side. Uh, this is pretty ugly. Pretty ugly looking trade right now at the moment. Definitely would not get into this one, so leave that one off. Pound, Japanese yen. This thing's been dropping like a stone lately. Came close to the D extension, but it did not hit. And this is what we talked about, is when these currency pairs make these shallow retracements, and that it pushes up, but then doesn't necessarily always get to the D extension. And this area is a perfect example where it shallow retracement, very shallow, pushed up towards the D extension, and now you're seeing it retrace all the way back. Matter of fact, it's like it traced back underneath where the original retracement was. So this right here is a no, this right here was a fib line. So this right here, expected to probably come back, maybe to this 2.36 Fibonacci retracement before it pushes back up. We'll see. Well, that's crazy, and that's another reason. That's another reason why to lock in your profits when you have one. Just because this thing would have erased a lot of gains, and you've been very, very upset right now looking at your account had you not locked in some profits. Now, just keep in mind the account that we're trading on this particular platform right here is a demo account. We do have a live account that we're trading as well. We just haven't brought it up online yet. Hopefully, we should do that here within the next 2 or 3 weeks or so. Okay. But look at that. It's pulling back. You don't want that. Stay out of this trade right here for right now. At least I would anyway. Aussie dollar. Anything Aussie dollar is kind of, definitely on the radar right now. But very suspect. Let's see here. Although it's saying, yeah, I'd caution this one. Yeah, I'd be cautious on this one. Definitely can trade it, but I'd definitely be cautious. Especially going into the market right now, just because tomorrow we're going to have I think it was the unemployment report for the U.S. So that should make a lot of noise. Um, be extremely cautious with that. Yep. Excuse me. Non-foreign payrolls. Yep. Tomorrow. Yeah, today at 8:30. Yep. Big number should be coming out. Building permits. So you look over here, like the building permits. These are all um, leading market indicators, right? Because if there are a lot of permits for to build houses, then that means that the builders see that the economy is doing good and that there's a strong economy because people are going to start building houses for people to come in and buy. If you start seeing that building permits are starting to lag off, then the economy is getting weak because, once again, people are not going to start purchasing permits to build houses if they think the economy is starting to fail. So this right here is what we call leading. There's leading, lagging, and then there's um, confirming or coincidence, whatever you want to call it, indicators. Lagging is exactly what it sounds like. It's lagging behind. You'll see it now, but it's something that's already passed, not really predictive of any kind of future events, and it's pretty much just kind of after the fact. Um, so it's like a couple of good things coming up on the board. You also see the same thing for the Canadian dollar. So just kind of going back to that. Going back to the U.S. Canadian dollar, it should be a good day for that pair as far as getting movement in there. Anything for the Australian dollar though? Let's see here. Oh, we got some information coming out of the Chinese economy. Consumer price index. So that should be good too as well, because now we're looking at inflation, measures of inflation for China, and that should, if we're seeing growth without a lot of inflation in the market, then that means that there's room to let that currency keep going. That could be good. But we gotta see. Anyway, Australian dollar, Great Britain pound Australian dollar, no for right now. I would be cautious with that if you do get into this pair, which I don't necessarily recommend at the moment. Trade tight stop losses. As soon as you can make it a risk-free trade, make it a risk-free trade. That already just looks ugly. It doesn't look that great. Then of course, Great Britain pound U.S. dollar doesn't look good at all unless you're trading down. And unfortunately, this should just be a pullback because the AB pattern hasn't been broken as of yet. So that means that this could still push up at any moment. We just don't know when that moment is going to be. But it has put in a really deep retracement. Um, but it's still on the sell side. So I won't get into this thing until it pushes up to the buy side. Let's see here. What do we got? Australian US dollar. This poor thing right here is looking crazy. Look at this. It's been going straight down. Still on the sell side. On the daily target, this is still the daily target right here, 67.196. Has a ways to go to get there. It's bottomed out. I mean, it's right here at the bottom. Yeah, I think it's pretty bottomed out, man. It's hitting lows that it hadn't hit. I mean, this is a low that it hadn't hit since 2016. It's really thinking that this thing could bounce off from here and go up. But it's really going to be dependent on what's going to happen with U.S. and China, which doesn't look like anything's going to happen at the moment. That's one to watch. It could continue to break either way. Um, excuse me. Unfortunately, depending on how you got your money positioned, you don't want it to break in the opposite direction where you're going. So stay vigilant on that one. I'll come back in and probably do like an analysis on that one at a later date, maybe over the weekend or something. Excuse me. I mean, it's pushing down for all. I mean, really. Let's see here. Think about using fibs though. You got to make sure that you're getting at the beginning of the downward move. At any rate, I'll come back. I'll come back and I'll play around with this when I got a little bit more time and see what we can do as far as getting these get some levels in here. So this pair right here is the one that should be in the spotlight, and it is. Been trading a little tight range here since yesterday, and it's probably not gonna break out of this range to around about 8:30, 8:35 today, Eastern Standard Time. Just because I'm waiting for the information to come through on the not Great Pound, the Canadian dollar and the U.S. Dollar. So if you haven't already gotten into this trade, don't get into it now. If you have gotten this trade, place your stop losses tight so that way you don't lose any money that you've already got or any profits that you already got in here. Because just kind of expect this thing to move pretty fast and violently tomorrow. Should be whipping around pretty good. And you definitely want to take advantage of that. And like I said, ride it out and get your profit. And excuse me. Ride out, get your profits, and don't want to miss out and lose anything unexpectedly. All right. Anyway, guys, that's it for me for tonight. I know it's kind of short once again, but don't really have much to speak on. This stuff is pretty much, just dragging along here. Don't really see any real new setups. I mean, we have that Great Britain Pound Aussie dollar setup, but that just doesn't look good. So probably would rather just sit that one out at the moment, or if I did get into it, make sure you have a really aggressive stop loss. Remember, it's all about trading with momentum, and there's not a lot of momentum in the market right now. There's some pullbacks. A lot of people are just kind of scared, and I think what happened yesterday with the ECB kind of spooked the market a little bit. So I would just play it cautiously. No need to go out there and risk money that you don't have to, and always just wait for the setups. So that way, you trade with a higher probability of being successful. Okay? At any rate, thanks for tuning in. I will see you guys. Today is Friday, so I won't see you tomorrow. But, definitely check us back on Monday morning. See you then. Take care, guys. Have a good weekend. Bye.